Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Wynn Resorts Limited annual report. Wynn Resorts Limited offers a wide range of businesses and services across its 4 operating segments. The company's resorts provide luxurious accommodations, including hotel towers with suites and villas, as well as health clubs, spas, salons, and pools. In terms of entertainment, Wynn Resorts properties offer various options such as performance lakes, immersive entertainment centers, theaters, nightclubs, and beach clubs. Guests can also enjoy a variety of dining experiences at the company's numerous food and beverage outlets, which serve everything from fine dining to casual fare. Gambling enthusiasts will find plenty to choose from, with casino space, private gaming salons, sky casinos, poker rooms, and sports books available across all 4 segments. Additionally, Wynn Resorts properties offer retail space, meeting and convention facilities, golf courses, and other amenities such as gondola rides and water shuttle services. The company's focus on luxury is evident in its attention to detail and commitment to providing exceptional experiences for its guests. With a range of activities and amenities available, Wynn Resorts Limited has established itself as a leader in the integrated resort industry. Unfortunately, I do not have access to the text you provided. However, I can still provide a general overview essay on what could cause Wynn Resorts Limited stock price to increase in the past year. The stock price of Wynn Resorts Limited has increased significantly over the past year due to several factors. One major reason is the company's strong financial performance. Wynn Resorts has consistently reported high revenue and profit margins, driven by its successful casino operations in Macau and Las Vegas. The company's ability to maintain a strong market position and expand its customer base has contributed to its increasing stock price. Another factor that could have contributed to the increase in Wynn Resorts' stock price is the improving economic conditions in Macau. As one of the largest gaming markets in the world, Macau's economic growth has a direct impact on Wynn Resorts' revenue. With the Chinese government's efforts to stimulate economic growth and improve infrastructure, Macau's economy has shown signs of recovery, leading to increased demand for gaming services. Additionally, Wynn Resorts' strategic investments in new projects and expansions have also contributed to its increasing stock price. The company's recent openings of new hotels and casinos in Las Vegas and Macau have not only generated significant revenue, but also enhanced the overall customer experience, attracting more visitors and investors to the region. Lastly, the company's efforts to improve its corporate governance and transparency have also boosted investor confidence, leading to an increase in stock price. Wynn Resorts' commitment to responsible gaming practices and its focus on sustainability have resonated with socially conscious investors who are increasingly looking for companies that align with their values. Overall, a combination of strong financial performance, improving economic conditions in Macau, strategic investments, and enhanced corporate governance has contributed to the increase in Wynn Resorts Limited stock price over the past year. The Wynn Resorts Limited market capitalization of $11 billion is significantly larger than the average industry peer of roughly $2 billion. This shows that Wynn Resorts Limited holds a significant advantage in their industry. Wynn Resorts Limited trades at a higher price-to-earnings ratio of 33 times and a lower price-to-book ratio of -38.13 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that investors are already valuing the industry with a forward premium for the industry, leaving limited opportunity to uncover undervalued stocks. The company exhibits a very high leverage profile, with liabilities accounting for 107% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline in the given data are multifaceted and varied across different segments. On one hand, casino revenues saw significant growth at Wynn Palace with a 62.3% increase, while Wynn Macau experienced a modest 0.2% growth. In contrast, Las Vegas witnessed a decline of 20.5%. Rooms revenue also showed substantial growth at Wynn Palace with a 70.6% increase, but declined by 15.1% in Las Vegas. Food and beverage revenue saw remarkable growth at Wynn Palace with an 81.5% increase, while experiencing a decline of 15.1% in Las Vegas. The total revenue growth was a 5.4% increase from the previous period. However, entertainment, retail, and other revenue declined significantly across all locations. The primary drivers of revenue growth can be attributed to the casino and rooms revenue segments. Wynn Palace's casino revenue saw a significant 46% growth, while its rooms revenue experienced a substantial 102% growth. In contrast, Wynn Macau's casino revenue declined by 0.4%, and its rooms revenue declined by 19.6%. The Encore Boston Harbor also showed growth in these segments. The decline in entertainment, retail, and other revenue can be attributed to the significant decrease in operating revenues and losses at Wynn Interactive Limited. The company faced forfeitures, legal settlement contributions, and contract termination costs that negatively impacted its revenue. The net income of the company experienced a significant decline between 2024 and 2025, decreasing by $173.7 million, or 34.7%. This drop was primarily attributed to contract termination costs and losses from changes in derivatives fair value. The decrease in net income also led to a reduction in profit margins. Specifically, the operating income margin decreased from 15.9% in 2024 to 14.6% in 2025, while the net income margin dropped from 8.96% to 5.73%. These changes suggest that the company's profitability was impacted by various factors, including a decline in rooms revenue at its Macau operations and an increase in provision for income taxes. The company's financial performance indicates a consistent trend of generating positive operating cash flow. According to multiple sources within the extracted summaries, it is confirmed that the company has been producing positive operating cash flow across various segments and time periods. Specifically, pages 47, 72, and 107 all support this assertion, highlighting the company's ability to generate sufficient cash from its operations in each of the years 2023, 2024, and 2025. This trend suggests a stable financial foundation for the company. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, the company has experienced a mix of increases and decreases across various periods. Notably, long-term debt obligations increased significantly from $9.41 billion to $10.63 billion, page 53. However, in some cases, the debt level remained relatively stable or decreased slightly. On the other hand, interest expenses have generally decreased or remained stable. For instance, interest expense, net of amounts capitalized, decreased by $62,854 from -$688,410 to -$625,556, page 65. Additionally, the weighted average interest rate for WM Cayman II revolver decreased from 6.43% to 5.1%, resulting in a decrease in interest expenses, page 84. Despite these overall trends, there are instances where interest expenses have increased significantly. For example, interest expenses increased from $23 million to $49.7 million, page 75. Overall, the company's debt level and interest expenses have undergone significant changes, with some periods experiencing increases or decreases in both areas. Management's outlook for the company is optimistic, driven by a strong strategy that leverages their extensive design and operational experience. They aim to construct and regularly reinvest in world-class integrated resorts, led by their in-house design, development, and construction subsidiary. Superior customer service is key to attracting customers and driving repeat visitation. The company is committed to corporate social responsibility, sustainability, and community involvement, with goals that include reaching net zero carbon emissions by 2050 and promoting responsible gaming practices. They believe that Macau's goal of becoming a world-class tourism destination will increase visitation and create future opportunities for growth. Management acknowledges the risks and uncertainties that could impact their business, but is confident in their strong business strategy. They plan to continue investing in their business, including capital expenditures and investments in unconsolidated affiliates, while returning value to shareholders through dividends and share repurchases. Estimated project capital expenditures are expected to be between $400 million and $450 million during 2026, and between $425 million and $475 million during 2027. Overall, management strategy is focused on delivering strong results, investing in their business, and returning value to shareholders, while maintaining a commitment to corporate social responsibility and sustainability. Wynn Resorts has made several strategic acquisitions and divestitures in recent years. In terms of acquisitions, the company has purchased a 40% equity interest in Wynn Al Marjan Island, leased Encore Boston Harbor for 30 years with an option to renew for another year, and acquired additional land on the Las Vegas Strip and adjacent to Encore Boston Harbor. These acquisitions are expected to enhance the company's portfolio and increase its revenue streams. However, the company has also made divestitures, including property transfer agreements, as noted in Note 5 of the financial statements. These transactions demonstrate the company's ability to adapt and adjust its business strategy to optimize its operations and maximize value for shareholders. The company's financial performance is reflected in its dividend payments. According to the provided information, the company has indeed paid dividends. This can be confirmed on page 35 and page 92 of the report, where it is stated that the amount paid out was $104.3 million and $104.6 million respectively. These figures indicate a significant investment by the company in its shareholders through dividend payments. Then, there are concerns about inventory buildup or supply chain disruption that could impact the company's operations. One of the main risks is supply chain disruption, which can occur when there are disruptions to the supply chains through which construction materials and furniture, fixtures, and equipment are obtained. The financial implications of these concerns are also evident in the company's accounts. A decrease in inventories, prepaid expenses, and other assets is expected to result in a loss of $10,724 by 2025. Conversely, an increase in accounts payable and accrued expenses is projected to amount to $3,282 by 2025. These financial projections suggest that inventory buildup or supply chain disruption could have significant consequences for the company's bottom line. That concludes the financial summary for Wynn Resorts Limited. Feel free to comment below, and I will be happy to answer them when possible.